So, the question I've got for you is, I learned something very, very valuable in Vegas at Coin Agenda now in January around why the value rose so much in 2017. But before I share that, what is your thoughts on why there was such tremendous growth, not just in Bitcoin, but in cryptocurrencies in general?
So it really goes back to the fact that Bitcoin is an unstoppable global phenomenon based on an unstoppable global technology. During the Arab Springs, the Egyptian army decided that they want to stop the revolution to coordinate via Facebook and Twitter by shutting down the internet. And they shut down the internet for 2 days before turning it back on, because they realized that they wouldn't only kill the revolution, they would kill the country. It is a little bit like saying, oh, the revolution needs water, so let's stop water from everybody. They cannot drink. You die. So Bitcoin and the blockchain on top of which Bitcoin is based is becoming a little bit like the internet and water. It is everywhere, it is unstoppable, and it is more and more essential for more and more vital components of a 21st century business, society, and civilization.
Before you move on to that, you did mention that you spoke to someone in Vegas about the price rise in 2017, and you said you were going to tell a story, and you never did. Can you remember that story? We have a few people asking.
Good point, Kevin. So it was actually Michael Turpin that spoke about it, and it's something I didn't know. But every 5 years, it gets twice as hard to mine Bitcoin. So in 2016, at the end of 2016, I don't know the exact technical term, but effectively, they halve the ability to. So for the same power, it takes double the amount of power to get the same amount of Bitcoin. And they do that every 5 years. So it happened first in 2011, it happened again in 2016. It's going to happen again in 2021. And what was interesting to me is I thought it was purely based on supply and demand in 2017 and just really a lot more people getting in the market, which it very much was. But also what they did is it constrained supply further, which effectively is simple economics, which is something I learned literally in the last month, which I found absolutely fascinating. Does that answer your question, Kevin?
Yes. I don't know, David, if you want to just comment on that.
Well, it is actually a very good point, because it contrasts Bitcoin, which is truly controlled by an algorithm that can only be changed when there is an incredibly broad consensus that doesn't need to be universal, but there has to be a consensus around users, miners, developers, application developers, with other tokens and currencies that are much more centrally controlled. Bitcoin has a limited, predictable supply, and this predictability has always been the champion of financial soundness. That is what financial markets want: predictability, right? Now, of course, that doesn't reflect in the predictability of the Bitcoin price, which is the consequence of many, many other factors. But the fact that you don't have to read the tea leaves of cryptic sentences from central bankers with respect to what they are going to do, and it is totally up to their saintly decisions that are impossible to criticize or even to understand, and they are not beholden to anybody to explain the reasons deeply of those decisions. The Bitcoin supply is absolutely known from now for basically ever, and that is very, very healthy, very healthy.